Thank you so much for attending today's economic forecast event. I'm Anita Huberman. I'm CEO of the Surrey Board of Trade. And I acknowledge that we're on the unceded territory today of the Coast Salish people, specifically the Kwantlen, Katzie, Semiahmoo, and Tawasin First Nations. Events like this at the Surrey Board of Trade simply do not happen without sponsorship support. Thank you so much to our presenting sponsor, BDC, the Business Development Bank of Canada, and our Business and International Trade Center sponsors, the law firm of Fasken, the Chambers of Commerce Group Insurance Plan, represented by S&F Benefits. Thank you so much for your support. I'd like to recognize on the Zoom call today, we have William Pristansky on behalf of Carrie Lynn Finley, MP for South Surrey White Rock, and City of Surrey councillors Linda Annis and Steve Pettigrew. Thank you for joining us this morning. Some instructions before we begin this digital forecast. All attendees are muted. I ask you to start thinking about questions now and type them in the chat function. I will get to them after the presentation is over. If we are not able to, the answer will be sent to you after the session is over. I wanted to first of all just remind everyone, the Surrey Board of Trade, we are Surrey's city building business organization. We're one of the top 10 largest chambers of commerce boards of trades in the country. Our whole mandate is to support business and bring business into the city through a very diversified service portfolio, all explained and updated regularly on www.businessinsurrey.com. We are the only business organization in British Columbia in partnership with the BC government that has a rapid response center, navigating through this pandemic, being your concierge of connections to different opportunities, to different government supports. We are here for you. We're one of 9 organizations that sit on the Premier's Economic Recovery Council, identifying gaps and opportunities through this pandemic. And we have a direct line right into the Prime Minister's office doing the same. We formed during the pandemic a collection of business associations within Surrey that are leadership oriented around gaps and opportunities during the pandemic, called the Surrey Economic Recovery Coalition. I just wanted to tell you a little bit more about our amazing city, Surrey. We're going to be the largest city in British Columbia very soon. And of course, about the Surrey Board of Trade. And we have a short video to show you on screen, which is going to be displayed right now.
It is a fact that the economic powerhouse is in Surrey as we become the largest city in British Columbia. That brings opportunity with the largest amount of industrial land inventory, a border-crossing city with our largest trading partner, and an international docking facility that brings in goods from all over the world. The Surrey Board of Trade represents 6,000 member contacts and over 60,000 employees. You're invited to work together with the Surrey Board of Trade as we set the stage to become BC's largest city. The Surrey Board of Trade connects you to a network of businesses and professionals, locally and internationally. Take your business further, expand your brand, and let the Surrey Board of Trade's government advocacy help your business and your economy. Experience the value of our unparalleled service delivery for your business, business connections, workplace training, international trade center, government advocacy, business and entrepreneurial center, industry development. The Surrey Board of Trade, here to support your business and attract business. Become a member today. Visit businessinsurrey.com. Surrey, where business happens.
And now, ladies and gentlemen, please help me welcome our presenting sponsor representative, the Vice President, Financing and Consulting for BDC, Louise Fogarty. Louise, over to you.
Thank you very much, Anita. And what an inspiring video that is. It really gives me goosebumps. But thank you very much for the introduction, Anita, and good morning to everyone joining us today. For those of you who don't know, BDC is the Business Development Bank of Canada, and in my role at the bank, I'm privileged to lead teams serving entrepreneurs in the Fraser Valley area. And in fact, BDC is the only Canadian bank devotedly exclusively to entrepreneurs. But even though we're a bank, our job isn't just to lend money, because after an extremely difficult year for entrepreneurs, we do know that the road to recovery is still filled with a lot of uncertainty. So as well as providing financing for business owners, we've also stepped up in other areas to try and provide the help and advice that we think is critical today. For example, we've introduced a number of free resources to our Entrepreneurs Toolkit at bdc.ca, which includes things like free webinars that you can watch in your own time on topics such as how to plan for recovery and how to start your business as we emerge from the pandemic, and also how to adapt to the new world and the new way of doing things with how to build an effective online strategy. And in addition to that, we've also added content to our Entrepreneurs Learning Center with a lot of online learning courses, such as marketing fundamentals and how to forecast and manage your cash flow. So all of these are resources designed to help entrepreneurs not only get through this crisis, but to emerge stronger on the other side. Now, I've introduced BDC's Chief Economist, Pierre, on several occasions before, but probably never in an environment like we find ourselves in today. As Canada's Bank for Entrepreneurs, we at BDC know that helping business owners to understand, interpret, and navigate key economic trends is critical so that you can respond and adapt. So it's now my pleasure to introduce Pierre Cléroux, who's Vice President Research and Chief Economist at BDC. Pierre leads a team of experts at the bank in analyzing economic data to identify business and sector trends that impact all of us. And then he shares his thoughts and conclusions across the country to help business owners understand the risks and opportunities in the current environment so that you can better position yourself to take action. So, Pierre, we're all very eager to hear what we hope is good news for us in BC. We don't want to hear from you if it isn't. So, without further ado, over to you, Pierre. Thank you.
Thank you, Louise. Welcome, everybody. Good morning. I hope you will like my surprise. I will keep the conclusion as a surprise. And just give me 1 sec. I'm going to share my screen. My presentation has 3 parts. First, I'm going to start with the situation in 2020, just to position ourselves where we are in terms of the recovery. I'm going to talk about 2021. What should we expect for the next 12 months? And at the end, I'm going to talk about trends that are emerging for our new business environment. This pandemic is going to end at one point, and after that, we will have to think about how we're going to operate in this new business environment. So first, let's talk about the economy. As you know, COVID-19 had a huge impact on the world economy. China is going to be the only major economy with positive growth this year, and growth is going to be much smaller than in the past. But the United States, Japan, Germany, Canada, all these countries are going to experience a contraction of the economy in 2020. And some developed economies, major economies, are going to be even worse. France, Mexico, Italy, United Kingdom are going to have a contraction that is going to be close to 10%. So as you can see, COVID-19 had a huge impact on our economies. But there's a good news. The good news is the recovery is happening very quickly. The graph that you have now is the world trade volume. So it's a kind of a factor or a good indicator of the world economy. As you can see, the world trade has been back really quickly, and now it's at the level of the pre-crisis level. This is quite unique because if you look at the beginning of the graph, you can see the situation took much more time during the 2008-2009 recession to go back to normal. So this is what we learned in 2020. When you lift the restrictions on the economy recovery is much faster than previous recession. So I'm going to come back to that, but this is important to understand the recovery for 2021. The United States now, as you know, it's our number one trade partner. It's still the number one economy in the world. So this is an important economy. As you can see from this graph that present the number of COVID-19 cases per million people, you can see that the situation is quite different in the US in blue than Canada in red. In Canada, we had a second wave, but the second wave was, I would say, under control, and the second wave is actually, the situation is improving now. In the United States, a number of cases were just out of control, a lot of cases, which really slowed down the economy. So the fact that the number of cases in the US was so strong, it actually slowed down the recovery. The United States lost 20 million jobs during the first lockdown. The initial recovery was good, but the recovery has been really slowing down because of the second wave of the virus. Even the United States industrial production is below the pre-crisis level. And what we are seeing now is retail sales is actually slowing down. Over the last 3 months, retail sales in the US has been declining. So the situation in the US is difficult because the large number of cases, this is really delaying the recovery in the United States. But we are positive for 2021. And there's two reasons for that. The first one is the plan to vaccine 100 million Americans in the next 100 days. This is very ambitious, but since Americans are producing the vaccine in the United States, it's possible for them to accelerate the vaccination. And this is really going to help the economy. Second is the program that Mr. Biden wants to introduce $1,900 billion to help the economy to recover. So this is very important. The amount of money is very large, even for the size of the US economy. So this is a good news. And this is going to help the Canadian economy because by rebound, our export is going to increase. So we are optimistic for this year. We believe that the US economy is going to recover with a growth of 3.5%. At the end of the year, we should be close to the pre-crisis level. Canada now, the situation in Canada has been very difficult for small and mid-sized firms. 76% of businesses in Canada have seen their sales decrease. Almost half, 45%, have to reduce staff, so make some layoff, and 39% have to reduce their debt. So as you can see, COVID-19 had a huge impact on the business community, but also on Canadians. This is the number of jobs in Canada. The Canadian economy lost 3 million jobs during the first lockdown. The initial recovery has been strong, but the recovery has been slowing down as the second wave of the virus was important in Canada. So this is where we are now for different sectors. In Canada, we are at 97%, the level of job we had in February. In some sector, they are already back to 100%. That's the case of financial services, manufacturing, and retail trade is at 99%. At the bottom of the graph, you can see that some sectors are having more difficulties. Accommodation and food services, there's a lot of restrictions on restaurants, and of course, we don't travel as much. But in general, the economy has been back in the return, the recovery has been strong. Actually, the recovery in Canada has been stronger than in other developed economies like the United States. So like I said, today we are at 97%, the level of job we had in February, compared to 94% in the US. And if I had other developed economies like United Kingdom or France or Germany, you would see that Canada is number one. There's two reasons why the Canadian economy recovery has been stronger. The first one is we were better to control the number of cases of the virus. So that's really the first reason. The second reason is our governments have introduced a number of programs to help Canadians and also Canadian businesses. I'll give you one example here. Government transfer to Canadians has increased by 60% or by more than $200 billion. As a result, our disposable income has increased since the beginning of the pandemic. It's now 8% higher than what it was in February. Disposable income is all the revenues that Canadians are getting, including salary, pension, revenue from investment, and government transfer, minus the tax that we pay. So that's basically the money we have in our pocket. So the disposable income is higher today for Canadian than it was in February. As a result, this is helping the economy to recover. We see it through the retail sales, which is higher today than it was in February. So after a strong decline, we have a strong recovery. And now retail sales are actually higher in Canada than they were. So there's much better situation than what I show you for the US, where the retail sales has been declining over the last 3 months. British Columbia now, well, as you know, we have the second wave in British Columbia, similar to the one in Canada. It's a bit different than the first wave, with BC was basically did much better than the Canadian average. Nevertheless, this is where we are today. British Columbia is at 99% the level of job that we had in February. So better than the Canadian performance and much better than American performance. Actually, at 99% is the best performance in the country. There's no other province who have recuperated as quickly as British Columbia. If we look by sector, some sectors are doing very well. Agriculture, 112%, manufacturing, 108%. That means that in these sectors, there's actually more people working today than in February 2020, just before the crisis. If we look, there's not a lot of sectors that are really down. Construction is at 88%, and I'm going to show that the reason for that, the housing starts, has been declining in the province. But for the other sectors, most of these sectors are coming back pretty quickly. And actually, one sector where there's a lot of job is the hotel and restaurant industry. And British Columbia is performing very well, second to only New Brunswick. So this is really helping the level of job, because there's a lot of job in this industry. Manufacturing has been doing very well. It's actually higher today than it was in February. So this is really good. You know, it's not in every part of the country where manufacturing is actually performing better now than it was performing in February. Wood manufacturing has been doing very well. The housing market in North America has been really good. So wood products, the demand for wood products has been strong, and BC is really benefiting from that. Food manufacturing has been doing well. And again, the industry in British Columbia is benefiting from that. The other manufacturing sales are performing well, maybe at the exception of fabricated metal, which often goes into the automotive and aerospace sector, two sectors that is having a little bit more difficulties. But in general, the manufacturing sales in British Columbia has been performing very well. Export is down by 9%, mostly because of coal and also natural gas. Some sectors are performing very well. Lumber is up by 10%. Copper is up by 15.6%. Finally, the real estate. Well, the housing starts were down in British Columbia in 2020 compared to Canada, but home sales has been performing well. It was up last year by 21.5%. This is actually surprising. Economists are surprised how the housing market has been performing so well across the country. This is surprising because usually when you have a recession, you have a slowdown in the housing market. And if you look, for example, in Vancouver and BC, you can see in every part of the province, the price has been increasing. So this is a surprise for a recession. And we see that across the country, although prices, as usual, has been increasing more in British Columbia than in the rest of the country. So despite the slowdown last year, despite the recession, Canadians have been buying houses. Interest rates are low. And also surveys are showing that Canadians are looking for a bigger house or better house because we work a lot from home. So that's probably explaining what's going on. We believe that the housing market will continue to do well in 2021. So the situation so far, where we are, like I said, in Canada, we are at 97%, the level of job we had before the crisis. In British Columbia, we are at 99%. So the recovery has been strong, stronger actually in Canada and in BC than other countries around the world. However, we're not done yet. We still have some job missing. Some sectors are not performing as well because of some restrictions because of COVID-19. So what should we expect for 2021, for the next 12 months? Well, our forecast is this is going to be the year of the recovery. We expect growth in Canada to be 4.5%, so a strong rebound compared to 2020. So this is a bit optimistic, and you might wonder, what I've been smoking, if I can say so. Actually, there's five reasons why we believe the economy is going to perform well in 2021. And the first reason, the most important one, is the vaccine. This recession is quite different than previous recession. This is not a financial crisis or an oil crisis or a bubble. This situation was self-imposed by government to fight the virus. And I'm not criticizing this. This is all the restriction we have been imposing. They were well done and they were necessary. But my point is, we impose some restriction on some sector, which has slowed down the economy. When we lift these restrictions, while the recovery is going to happen. So the vaccine is key. If we are we are planning, most Canadians are vaccinated by the end of the summer, we will be able to lift most of the restrictions on our economy. And as a result, we believe that the recovery is going to happen in 2021. Two examples, manufacturing and retail sales is a good example. When you lift restrictions on sectors, we realize in 2020 that the recovery is happening pretty quickly. So that's the first reason to be optimistic about 2021. Second reason is government policies and programs has really helped the recovery so far. And these programs are still into action. They will actually phasing out during the summer, but they are going to support their growth in 2021, not only at the federal level, but at the provincial level. For example, the BC government has introduced a number of programs to help the recovery. So that's the second reason to be optimistic about this year, is this help from governments is going to help the recovery. The third reason is the fact that commodity prices has been really good and helping the recovery in the province. If you look at the yellow line, you can see that the price of lumber has been really good, which has really helped the industry in British Columbia and the rest of the country. Same thing for mining, metals and minerals prices has been good, and agriculture as well. So this is going to continue in 2021. The demand for these commodities are going to support the growth and are going to support the economy for 2021. The fourth reason is coming from consumers. The graph that you see is actually our saving as Canadians over time. So if you look in 2018, you can see that we were saving every quarter about 6 billion or sometimes 17 billion, 15 billion. So it's volatile, but the numbers was relatively small. Well, in the last 12 months, Canadians have been saving $187 billion. That's a lot of money. This is not surprising. In every recession, Canadians are saving or consumers are saving money because of the uncertainty. So people postpone buying a car, for example. So they were saving because there's a lot of uncertainty. On top of it, there was some restriction in 2020. We couldn't go to restaurants as much as we wanted to. We couldn't travel. So all this is the reason why Canadians have been saving money. So we expect Canadians to spend more money in 2021, which is going to help the recovery. After each recession, consumers are spending more money. The first year of the after recession, consumers are spending more money than before. So this is another reason to be optimistic about this year. Finally, business investment are going to improve this year compared to 2020. We keep track of business investment intention every quarter. Here you see Canada in red and British Columbia in blue. You can see that the number is still negative. So it's a balance of opinion. It means that we're not out of the wood yet. We're not going to have huge investment in 2021, but the situation is really improving compared to last year. So we're going to have more business investment this year than we did last year. So these are the 5 reasons why we believe that 2021 is going to be the year of the recovery. But there's a risk to this forecast, and the risk is COVID-19. We are at the end of the second wave. Some experts believe that we're going to have a third wave after March break. Well, we will hope not. But the big factor is going to be the vaccine. If every Canadian or most Canadians are vaccinated before the end of the summer, as the plan, we believe that recovery is going to be strong, especially in the second part of the year. However, if for some reasons the vaccination is delayed, well, the recovery is going to be delayed as well. Today, we're still optimistic. We still believe that most Canadians are going to be vaccinated before the end of the summer. And as a result, we will be able to lift the restrictions on our economy. And the recovery is going to really happen this year for the 5 reasons I mentioned. So the last part of the presentation is about what you should watch for as entrepreneurs for the next 12 months. We're doing a lot of research to understand how our business environment is going to change. And actually the pandemic have changed the game in some sectors. So I'm going to talk about 4 trends. The first one is the online business. Look at this graph. If you look at the beginning of the graph in January and February 2020, before the pandemic, the volume of the online business in Canada was $1.6 billion every month. Now, the latest number we have is November 20 on the other side of the graph. You can see that in November, the volume of the online business was 4.3 billion, so 3 times what it was before the pandemic. So the online business is not a new trend, but the pandemic has accelerated this trend. More and more Canadians are buying online just because in some cases they were forced to do it because retail were closed for a while. Many Canadians bought something online for the first time and they really liked it. We do a lot of research on the consumer side to understand how they're going to behave in terms of consumption in the next 12 months. 42% of Canadians are saying they're going to buy more online in the next 6 months. If we talk to younger people, actually this ratio is 50%. So the online business is not going to go back to the pre-crisis level. It's just going to continue to increase. And on the business side, our businesses are saying that they are investing to improve their presence online. So entrepreneurs have seen the benefits. They have seen where the market is going. So they are investing to improve their website, to be more active on social media, to increase their online advertising. So on both sides, on the consumer side, on the business side, everybody is focusing on the online business. So that's the first new trend. We're going to be online much more in the future than we were before the pandemic. The second trend is actually working from home. 40% of Canadians today are working from home. This is a huge number. So the question is, after this pandemic is over, are we still going to continue to work from home? The answer to that is yes. When we interview people, consumers, a lot of Canadians want to work more from home after this pandemic is over. When we talk to business, 59% believe that some of their employees are going to work remotely after this pandemic is over. So this is where the game really changed. I can tell you, we have been doing research on this topic for a long time. We never saw a lot of appetite on the business side to have their employees working from home. But the pandemic has changed the game. The perception of entrepreneurs is quite different. In our latest survey on this topic, Canadian entrepreneurs are saying that this is good for innovation. Working remotely is actually good for employee productivity and it's good for employee motivation. If you look at the bottom of this slide, you can see that 18% of Canadian entrepreneurs believe their workspace needs is going to decrease in the future. So this is a new thing. The pandemic changed the game really on that. We're working much more from home today. We're not going to work probably as much in the future, but we will not go back to the pre-crisis level. The new equilibrium in terms of working from the workplace and working from home is going to be different. And Canadians are going to work from home much more in the future than they did in the past. The third trend, which has kind of really surprised us, last year, a lot of Canadian businesses used the opportunity to invest more in technology. Their revenue declined, and they were looking for taking action to reduce their costs. 63% of businesses have accelerated the technology adoption to reduce their costs, to be more efficient, to increase their productivity. So when I say I'm surprised, it's because usually in recession, businesses are not investing as much. But 2020 was different, was a different kind of recession. A lot of businesses took the opportunity to take the time to see how they can improve their business. So 63% improve their level of investment. And actually 64% said that technology really helped them to cope with the impact of COVID-19. That's especially true for people who are selling online. So technology has helped them. And as a result, 67% believe that they are going to invest more in technology in the next 12 months. So there's a real momentum in investing in technology. And this is actually very good for business, it's very good for the economy. Finally, the last trend that I want to talk about is the labor shortage. I don't know if you remember, that sounds so far away, but a year ago, before the pandemic, there was a shortage of labor in British Columbia. Well, this shortage of labor is coming back now. The graph that you see is a survey done by the Bank of Canada, and they ask businesses if shortage of labor is an issue. If you look at the beginning of the pandemic, 2020, the second quarter, well, this number was really small. But as the economy is improving, well, shortage of labor is coming back. So we believe as the economy is improving this year, the shortage of labor is going to come back very quickly. And this is going to be actually the most important challenge facing businesses in the next few years. The issue is we have an aging population in Canada. A lot of Canadians are retiring, and actually we don't have enough young people to enter the job market. This problem was put on the back burner over the last 12 months, but as the economy is improving, this problem is coming back. And this is going to be even worse because we attract about 400,000 people in Canada, 400,000 immigrants every year. Well, last year we couldn't attract those people because of the pandemic. So a province like British Columbia, which attract a lot of immigrants, well, the situation in 2020 was quite different, which is going to make the shortage of labor worse. So this is going to be an important challenge for the next years. So businesses have to think about it. They have to plan for it, invest more in technology to replace some workers by technology. They have also to think about, to have a plan how they're going to grow their business in the context of shortage of labor shortage. So four trends that are going to shape our business environment: more online business than ever before. More and more of our workers are going to ask and are going to work remotely. Business are investing in more in technology. So if you want to keep up with the competition, it's important that you improve the efficiency of your business. Finally, labor shortage is back. And this is going to be an important issue that we have to deal with. So I'm going to stop here. I hope this is useful, and I would be very happy to take your question.
Thank you so much, Pierre. It just always invaluable information. And everyone, just to let you know, this session is being recorded. The link will be sent to you by email, as well as the presentation deck. Some questions that we have for you is, number one is, some industries, Pierre, are doing very well. For example, in Surrey, our construction and development sector, we have the greatest number of manufacturers in British Columbia. Many of them are doing well. But can these industries that are doing well compensate for those industries that are not doing well?
Yes and no. Yes, in the way that like there's more job in manufacturing today than in February. So this is a good news, and people who lost their job in other sectors could probably work in manufacturing. So that's the yes part. The no part is, there's important sectors. For example, tourism is a very important sector in British Columbia, and that cannot be replaced by manufacturing or technology or something else. So these sectors are going to be the last sector to fully recover. But they will recover at one point. When most people are vaccinated and we will be able to travel, these sectors are going to come back. So like I said, 99% of the jobs has been recuperated so far, but there's some sectors that are going to take more time to recover.
Pierre, you know that Surrey is a border city, and the US is still our first trading partner. Tell us about your thoughts about the new US government administration, softwood lumber, and how it's going to impact Canada's economy overall.
Well, in general, I think the new administration is going to be good for Canada just because it's going to be easier to negotiate with Mr. Biden than it was with Mr. Trump. And also, it's going to reduce the uncertainty. I think it's going to be much more predictable what the US is looking for than in the past. Having said that, the United States has their own agenda. And, we saw that with Keystone, that was clear that Mr. Biden was against Keystone when he was in the Obama administration. The first thing he did, he actually canceled Keystone. And there was not much we could do. They also they are going to introduce new regulation in terms of the Buying American Act. And I don't think it's going to have a huge impact on Canada, but that's something that they have promised to do, and they are going to do it. On the lumber side, as you know, we have a long-term dispute between Canada and the US, and they have introduced tariff on our lumber industry. Frankly, I don't think this is going to change. Through time, different government in the US has always believed that the lumber trade between Canada and the US is unfair. We don't agree with that on this side of the border. But I would be surprised that Mr. Biden will eliminate the tariff on lumber. I think it's a long term dispute, and I think this is going to continue.
You know, one of the critics of either the federal or provincial government is the amount of money that was spent on economic recovery, and now the deficits that are at play. And I was just wanting to get your thoughts. Is business going to have to pay to ensure we're on the pathway towards debt reduction? What are your thoughts on that?
That's a very good question, and it's not an easy one to answer. Yes, we spend a lot of money, both at the federal and the provincial level, to help Canadians and also Canadian businesses. And I think these programs really help on the people side. Despite the fact that a lot of people lost their job, there were compensation from different programs. On the business side, actually, the level of bankruptcy was lower in 2020 than in 2019. So despite the recession, a lot of businesses were able to use government program to survive. So I think that was the right thing to do. Now, well, we have to pay our debt. And the good news is we had a very good starting point. At the federal level, we had a very low debt to GDP ratio, the lowest in the G7 countries, um, the most developed economies. And in the BC, we actually had a balanced budget before we started the recession. The recession. So we had a very good starting point. We spent a lot of money, so now we're still in good shape. But it will be a good idea in the next decade to improve our financial situation, to be able to do the same if we have another recession in the future. How to do that? That's a question. You can increase taxes, you can reduce spending, or you can actually be patient and wait that the growth of the economy is going to bring more revenue by itself, and you're going to pay the deficit that way. I think that's probably the option that government are going to take. Because right now, increasing taxes would be a very bad idea. We're trying to finalize this recovery. We're trying to go back to the pre-crisis level. So if you increase taxes, you're going to slow down this recovery. So I don't believe governments are going to do that. I think you're going to hear from governments that there's no problem with our debt level or deficit level, and we're going to take a longer time to go back to a balanced budget. And I think that's the right thing to do.
What are your thoughts about interest rates increasing or inflation? The spending power that consumers are going to have. What's your opinion about the future of those two items?
Inflation is low right now in Canada. It's about 1%, so which is lower than what we had before the crisis. And inflation is not going to increase much before we have a full recovery. So we have inflation when we have pressure on capacity. So, for example, there's too much demand and supply is not able to match that. While the recession has slowed down the demand in most products and services. So, before we have inflation, it's going to take a full recovery, probably another year or so. So, interest rates are low to help the economy to recover. And there's no pressure to increase interest rate because inflation is low. So we don't expect interest rate to increase before 2023. And after that, we should have a very strong economy. Interest rate will start to increase, but very slowly. So in the next 5 years, I believe we're going to operate in low interest rate environment.
Tell me about your perspective on, one of the contentious government support programs at the federal level was the Canada Emergency Response Benefit, the CERB. Do you think that's contributing to labor shortages?
Well, it's probably doing so right now. It was a good program during the recession to help Canadians. Um, as the economy is really improving, I think the government is going to phase out this program. So the idea is, as the economy is improving this year, these programs are going to disappear to let the economy to people will get back their job, or they will go back on the job market and they won't need that. So was this program too generous? It's hard to judge. In in 2020 hindsight is probably true, but at the beginning you have to remember that these programs were designed like in a question of weeks, and there was really something that has to be done. The good thing about these programs, they really help the recovery in Canada. That's one of the reasons why we had this stronger recovery in Canada than in the United States or other developed economies. So it's in hindsight probably was too much, but it was very difficult to judge that at the beginning of this crisis. This crisis came so quickly, and it was really unusual. So it was hard to make the perfect call, I would say.
I found it intriguing in your presentation that you said that the hotel and restaurant sectors were doing well in British Columbia. Can you just expand upon that? What survey period from 2020 or 2019 covered your job loss statistics? Because hotels in the Metro Vancouver area are facing a 70% job loss, for example.
Well, these numbers are from December 2020 compared to February. So this is the difference between the most latest number and the beginning of the pandemic. I think the reason why it's restaurant and hotels, it's performing much better in British Columbia. It's because in some provinces like Quebec and Ontario, actually restaurants are closed. So despite the fact that there's some restrictions in British Columbia and you don't have a big restriction on tourism, it's still much better than when you have to close totally restaurants like in Toronto or Montreal. So that's the reason. It's not 100%, it's 93%, but I think that's the reason why BC is performing better that way than other part of the country.
The pandemic has really shown the inequities um, between, who has wealth and who doesn't have wealth. And so I was wanting to get your perspective on asset inflation, where we're seeing assets like real estate, stocks, et cetera, increase well beyond 2% each year. What's your perspective on this wealth gap between the rich and the poor moving forward?
Well, first of all, I'm surprised, like many economists, that the housing market performs so well. Like I said, usually when you have a recession, you have a slowdown in the housing market, and you would expect that, for example, prices would decline, which was the opposite in British Columbia, but also in the rest of the country. It seems that despite we had a recession and despite like a lot of people lost their job, Canadians remain very confident in the housing market, and they continue to buy houses, and this had a positive impact on prices. So this is different than what we saw in the previous recession. So I think the housing market will continue to do well, but we'll have to be careful because prices are getting very high, and there's a limit to that. In terms of the stock market, it's also a surprise. It went down very quickly at the beginning of the pandemic, if you remember, but it came back very quickly as well. Actually, at one point in the fall, the stock market was performing better than the economy, which is always surprising. And it's also a worry because it's not sustainable. So I believe the stock market will perform well this year because investors are very optimistic about the vaccine. But again, I will be careful because a lot of stocks are getting over evaluated. So you have to be careful when prices are getting too high. In terms of you're perfectly right. Most Canadians, a lot of Canadians have been not hurt by the recession. There was more focus on people who have low skill, for example, in restaurant accommodation business. Um, in a lot of the service sector, a lot of people lost their job. Actually, I saw studies that people who are in the high end in terms of revenue, they didn't suffer from the recession compared to the others. Unfortunately, this is not going to get better. And the reason is our economy is turning to technology much more than before. And what it does help people who have skills, and people who have skills are going to benefit from the adoption of technology. People who are going to be penalized from that is people who don't have skills. So they are going to have difficulties to keep their job, or their salaries is not going to increase at the same pace than people with skills. So unfortunately, we are going into a decade where technology is going to be much more important than in the past. And this is going to help a lot of Canadians, but we'll have to make sure that we are able to um, left nobody behind because, people who doesn't have a lot of skills or people who have difficulties of working with technology, they're going to be left behind. So it's going to be an issue. It was an issue, before the pandemic. The pandemic have accelerated that. And this is going to be a big issue for the next decade for government. We will have to help people to retrain for people who doesn't have enough skill to find, a good living in this new economy.
Pierre, one of the things that we said right at the beginning of the pandemic is we can't have ongoing government supports that continue to increase the debt burden for businesses. And so, as we move out of this pandemic, businesses are going to have to repay their loans. What are your thoughts about that? Is it really realistic to think that we're doing this well economically within British Columbia and Canada when so many businesses have to repay debt?
It's a very good question. And that's something we follow very carefully because actually the level of debt, of business debt in Canada has increased significantly over over the last 12 months during the pandemic. A lot of businesses didn't have any choice. They had to take some debt to go through this crisis. So, um, businesses are not governments, so I think they will take that very seriously. And what we are seeing in our surveys is people are focusing the first, when we ask businesses across the country, what is your first priority for the next 12 months? Well, number one is to improve their financial situation. So what we're saying now is this is going to actually limit the amount of investment that businesses are going to make in the next few years because they are going to try to repay their debt pretty quickly. So you're right. This is actually going to limit the growth in the next few years because many businesses will put this as a priority.
Do you think, just as an addition to that, and the critics have indicated this, is that the Canadian economy appears to be great on the outside, but inside the economy is rotting? Where is the accounting for real growth? The actual investments that need to be made on infrastructure to create jobs. What are your thoughts on that?
I'm not. I disagree with that. I think the Canadian economy is very solid. You can see. Let's take the example of British Columbia. The growth is coming back, and the growth is coming from manufacturing sector that has been performing very well. The demand is strong for food manufacturing, for lumber, for metals manufacturing. And other sectors that are performing well is the lumber sector. Another sector that is really performing well, we haven't talked about, is technology. Right at the end of the summer, the technology sector has been back to the pre-crisis level. So they have recuperated all the jobs. There's more people working in tech today than in February. And how lumber, mining, oil and gas, those sectors are important in British Columbia. But I'm going to surprise you. There's actually more people working in tech in British Columbia than there's people working in mining, oil and gas, and lumber all together. So the economy has been shifting, has been changing. That was the case before the pandemic, and the pandemic is just going to accelerate that. So the growth in British Columbia, for example, is based on very solid sectors: manufacturing, technology, commodities. So that's why I'm not worried. I think the growth is solid. Well, there's going to be some adjustment. Tourism is not going to come back quickly. It's going to take probably another 2 years before we go back to the pre-crisis level. So this sector is going to struggle, or is going to be lagging compared to the other sectors. But the growth has been very strong. And although government has put some debt, you have to remember that the BC government had a balanced budget for the last few years. So British Columbia was in a very good shape before this pandemic. So there's no reason to believe it's going to be different. For Canada, well, it's true that we took a lot of that, but again, we had a good starting point. So we are not in bad shape. But as an economist, I would say that it's important to go back to a balanced budget at one point to be able to help Canadians for the next recession. We don't know when this is going to happen. But during this recession we had last year, not every government was able to put money on the table to help the recovery. Many large countries in Europe couldn't do that because they were too much in debt. In Canada, we were able to spend money because we had a low debt level. So it's important. As an economist, I believe it's important to go back to that. But the Canadian economy to me, is very solid. And I'm going to conclude on that, my comment on this. But, one of the biggest strengths of this economy is it's very diversified. We have very strong tech industry, very strong manufacturing, one of the best in aerospace, one of the best in automotive, one of the best in the wood product. We also have a lot of natural resources. Look at any developed economies in Europe, they don't have that. So we have a mix. We have oil and gas, which is gas is very important in British Columbia. So we have a mix of strength that is very diversified, which is often help the Canadian economy to better recover than other economies.
My final question to you is on the pathway towards economic recovery. We've been working on some initiatives related to the Cascadia Economic Corridor. Surrey is a border city, and we border Washington State. I was just wanting to understand your perspective about global or international investments in British Columbia or Canada as a pathway towards investment, job creation, infrastructure development.
Well, I think foreign investment are very important, and in Canada, we had received a lot of foreign investment, especially on our energy sectors. The natural gas project in British Columbia is a good example of that. A lot of these investments are coming from outside the country. So this is going to continue, and British Columbia is well positioned to take advantage of that. I'll give you an example. 75% of everything we export in Canada is going to the US. This is only 50% in British Columbia because you have the strongest export to Asia of the country. So it's much easier to export from Vancouver to Asia than it is from Toronto, for example. So you have really benefited from that, and your export are much more diversified than in the rest of the country. So British Columbia is really well positioned to take advantage of these investments coming not only from south of the border, which the U.S. is still the #1 economy in the world, so this is not this is something important, but also from other part of the country that are growing at a faster pace, like Asia. So I think I'm not worried. I think in the future, like the way I see it, our biggest issue in the next 5 years is going to have the labor to be able to grow our businesses because we have an aging population. A lot of Canadians are retiring. We don't have a lot of young people. We accept immigration, which is good, but it's not going to be enough. So our biggest challenge for the next 5 years is going to be our shortage of labor if we want to continue to grow our businesses.
And on top of that, is also supporting entrepreneurship. And I know BDC does that so well. And we need to continue supporting those that will take that risk in entrepreneurship and creating jobs. Do you have any final words, Pierre?
Well, I think you're perfectly right. And we did a study last year showing that the face of entrepreneurship is changing. 10 years ago in Canada, the face, like the average entrepreneur was a white man between 25 and 45, which is no longer the case. Half of entrepreneurs are women now. A lot of entrepreneurs are coming from outside the country. They are immigrants that came to Canada and they have started a business. And there's a lot also of younger people who are starting businesses. So this is great. We need this diversification in terms of entrepreneurship. And entrepreneurship is the key, because attracting investment from outside is very important. But if you want to be growing your economy, you need people to take a risk, start a business, and grow a business.
Thank you so much, Pierre, for joining us today and sharing what's going to happen in 2021. And I hope we can see you in person in 2022. Thank you again to our presenting sponsor, BDC, the Business Development Bank of Canada. And ladies and gentlemen, please check out www.businessinsurrey.com for a variety of events, services, and resources to help your business. On February 10th, we're hearing from Canada's finance critic, Pierre Cléroux. On February 22, we're joined by BC's Transportation Minister. And on February 23rd, we are going to have a town hall with BC's Minister of Economic Recovery and with a focus on trade. Ladies and gentlemen, make it a great business day. And remember, Surrey is an opportunity city.